Hey, I'm Karl Kyler, your San Diego Realtor, and this is your San Diego Market Matters. I'm gonna do something a little different in this episode. I wanna go over the January numbers. Usually I cover some hot topics in there, but I really wanna focus on the January numbers. And the reason why is because we're starting to see some shifts in the market. And there's a lot of shifts that are happening nationally with reports coming out from Zillow and Redfin and such. So I really wanna make sure that people here in San Diego, you, know exactly what's happening in San Diego relative to what's happening in the rest of the nation. So I'm gonna do a screen share here. I'm gonna show you exactly what I'm talking about. Okay, so this is the monthly report that comes out. It usually comes out by the 5th or 6th of the following month. It's put on by SDAR, San Diego Association of Realtors, and it's all the information from the MLS. So everything that sold, went into pending, that was listed for sale, that's on the multiple listing services, which all agents use. This is where all the data comes from. All right, so first off, let's start with new listings. Okay, January showed 1,811 new listings coming to market, which is up almost 10%, specifically 9.6% from the same time last year. So January of last year of 2024, they did 1,653. This year we're doing 1,811, that's up 9.6%. This is pretty consistent. Our inventory has been going up. This is very, very common. What I'm curious to see is what will happen in February to that percentage amount, because typically after Super Bowl is when we start to see more inventory come to market. All right, next we want to look at pending sales. We had pending sales. We had 1,087 homes going to pending in December, which was down 2.4%. I don't think that's significant enough to be concerned of a negative number. 923 closed in the month of January in comparison to 887 in the January of 2024, an increase of 5%. Now, something to be mindful of there is that some of that might be spillover from deals that went into escrow like near the end of maybe even the middle of November because of the holidays. So some people, like a lot of sellers, may have not wanted to close escrow during the holidays and then have to move out. So sometimes what we'll do is we'll extend escrow to like 6 weeks, and we'll still remove all the contingencies early on. So that could be a spillover of that. All right, the next two figures I really want you to pay attention to. It's median sales price and average sales price. I hate when people reference median sales price in general. I'm only referencing and referring to it here because it's for the detached section of the market. And then I'm gonna scroll down, I'm gonna show you the attached section of the market. But right here, the median sales price went up 7.3% and the average sales price went up 6.6%. Both growth in January, despite us having more inventory, our pendings coming down, but we still had, I don't know if we really need to use the closed sales as a reference point, but nevertheless, it's data, it does help. But the fact of the matter is that our values still went up in January. Next, I want to point out percentage of original price received. Right now, we're at 97.4%. So let me just use very, very simple numbers here. If you had a home that was listed at $1 million, you would get 97.4% of that price. That would be $974,000, where in comparison to January of last year, it would have been on $1 million listed home, it would have been 984,000. So a difference of about 10 grand in that case, which shows up as about a decrease of 1%. So just be mindful, the list price offers are coming in and settling in slightly below. And that could be because our market time is extending. So let's look at that next metric. Days on market up to 44 days on average, almost a 19% increase from this time last year. So that's a very, very important number to keep an eye on. If that number gets to 60, that's probably when you're gonna start seeing the percentage of original price received drop down to maybe 94 to 96%. So like I feel very, very common that when people get to 60 days on market, they start to panic a little and then they think immediately the market's crashing. Okay, so for the last two metrics, we're gonna look at inventory of homes for sale and the month supply of inventory. So inventory of homes for sale in January is 2,319 homes, up 21%. Now this is very much in line with national averages. I believe Redfin just posted that most markets are around 22 or 23, maybe even 24% growth. Our overall inventory in the nation is up, I think 54%. Don't quote me on that number. Maybe I'll do a video separate on that Redfin article, but we're up 22%. I don't know, and as if you ask any agents here, this isn't really that alarming. We do want to see our pending sales keep up with that number, and they're not. So what we're seeing is buyers are having more options, and they're typically showing up as the only offer to a property. Now, if you have this just grand slam of a property, you will get multiple offers. It's just very, very common. I feel like every client I have, when we find that diamond in the rough, all the other properties there was no offers on, but the one that's just, again, the grand slam, it ends up getting 5 or 6 offers. So that still happens. You just gotta have your house has to be the complete package. Lastly, months supply of inventory. We're almost at 2 months supply, up almost 20% from this time last year. So with the home days on market expanding and with the inventory we're having, what this means is that if no other homes came on the market, it would take us 1.9 months to dissolve everything with the buyer pool that we currently have. All right, so that's the detached market. We have inventory going up. Our pending sales did decline a little bit, but again, let me take you back to where interest rates are. If you look historically at the mortgage applications, they jump every time rates get into that 6% range. We had rates that were 7% or higher for I want to say the entire month of January. It wasn't until this last week that we saw rates finally break. I think it was 6.99. I saw it one time, but we'll see how long that holds because the jobs report just came out and unemployment came down from 4.1% to 4%. We were all expecting that to go up to like 5%. And that's where at 5%, that's when we were going to see mortgage rates come down, but unemployment came down. So we'll see what happens to mortgage rates next week. All right, now let's go ahead and jump into the attached side of the market next. With the attached side of the market, we see some similar trends and then at the same time, some little different trends as well. So let's kick it off with new listings. New listings are up almost 17%. We did 1,193 compared to 1,022 January of last year. So we're up 17% there. Our pending sales are down almost 10%. That's significant. That's something to keep an eye on. That's a trend that's telling us, are buyers holding off from getting into the condo side of the market and they're waiting to go into the detached side of the market? That's kind of what my first thought is. Closed sales are down 4.3%. So we closed 514 in the month of January versus 537 in January of last year. Our median sales price and our average sales price both went up to pretty comparable ranges. So 2.3% on the median sales price, 3.7% on the average sales price. Again, this is the attached sector only, different from the detached sector. The detached sector was definitely getting double what these are. Again, that's another trend. So are buyers more inclined to get into that detached market? It seems like it might be. Percentage of original price received, this came down just a hair, half a point. I don't even think that's significant enough to really measure. It could really be considered a rounding error. But nevertheless, they're getting 97.9%, practically 98% of the list to sale price. Days on market is very comparable to the detached side. Detached side was 44, attached side is 46. The next one is where there's a significant difference between attached and detached. The inventory of homes for sale on the market went up 40.7% in comparison to what January did last year. That's a significant amount of growth in 1 year. What we're seeing is more options in the attached sector and less of them selling. What we're probably going to do is see that inventory of home sale continue to increase even into February, especially since our pending and closing sales are negative. Month supply of inventory is 2.4%, up 40% from this time last year. All right, and that's it for this week's San Diego Market Matters. I hope that this mix-up of a dynamic was helpful for you to understand what's happening in our market. It's always important to look back last month, look back to last quarter, see where the trends are taking us. And this is one of the reasons I report to you on the Case-Shiller Index. They do a comprehensive understanding and dive on market numbers, and then they tell us how markets are doing. This gives us an idea of where the market is going and helps us better further understand what to expect in the near future. If you're looking at getting into the market and you want to talk a little bit more and do a little bit more of a deeper dive, I'm always happy to sit down with you over a cup of coffee or a beer, and you can ask me all the questions you want. My goal is to educate you so that you feel comfortable and confident with moving forward with your first decision or your next decision if you're not a first-time buyer. That's it for this video. If you have any thoughts, questions, concerns, don't hesitate to reach out. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you next video.